Standard Bank has an Africa-wide business, also owns Liberty. Market cap 257.6 billion rand, PE of 11.1, dividend yield here of 4.9%. So whereas FirstRand did not really go big into the Africa story, Standard Bank did.
And throughout the world as well. You know, a few years ago they had operations in Russia, in London and in Argentina. You know, all of it met with I think, sort of mixed success. But Standard Bank decided to exit a lot of those operations and, you know, focus really on Africa and on South Africa, which I think is their core business. The concern with Standard Bank has always been that the business outside South Africa was never really delivering returns on equity, particularly in Africa. But also, you know, they had the problem in the Hong Kong ports a few years ago where they had that big fraud. Standard Bank, the London operation also was sucking too much of capital and not delivering returns. They've cleaned up a lot of that right now. This year they had the problem with Liberty. Liberty's earnings kind of collapsing, and it's a big component of, at the margin of what Standard Bank delivers in terms of earnings growth. So, you know, you've got to take a view as to whether the worst is over with Standard Bank, really. And if your view is that it is, then, you know, the PEs and the dividend yields may actually justify an investment.
Do you believe that the worst is over? Of course, Dave Munro talking about Liberty now at the helm of Liberty after Thabo Loti's departure.
Look, I think Liberty is a concern because it doesn't really have enough renewal business coming through. They don't have a value proposition like Discovery does in terms of their core life book, in terms of an incentive program.
So the bank assurance model is not being effective.
Yeah, so I think Mr. Munro, who is a very talented executive, will probably just tidy it up and bring it in a little. But Standard Bank, yes, I think it is a slimmed down model, and the fact that it has exited all of those global operations was partly because ICBC, their 20% Chinese holder, had those global aspirations and has been buying some of those businesses from them. So it's still like one of South Africa's preeminent financial services companies. It still has its core customer base. So
yes,
the question really is,
would you buy? You've never really been interested. When we have had our banking exposure, Standard Bank was never on the table.
Correct. And internally, like we liked FirstRand because it had all that smart technology, Standard Bank feels like it's playing catch up. I don't know, if you're a Standard Bank customer, you get an SMS once every 2 or 3 months to say that the whole system's going to be down on a Sunday because they're doing emergency technology upgrades.
Doesn't imbue one with confidence.
Well, you know, I know that's just the legacy systems that they're having to try and drag into the 21st century, but that does tell a story, you're right.
Have you got, or your clients got exposure to Standard Bank?
We do, largely based on valuation. You know, it's a good dividend payer. And in the current environment, you know, where stocks are so expensive, it's hard to find value. So,
you would say, and would you call it hot?
I call it hot on that basis.
And what about the dual CEO issue? You haven't given them a flogging for that yet?
Yeah, I've given them a lot of floggings over the period. How do you feel about? How do you feel about the dual CEO?
That does seem to be working okay. I mean, Sim Chabalala, Ben Kruger seem to be doing a good job, you know, doing a tag team operation, handing over well from time to time. So I think it is poised for better times. But the macro context that I've been droning on about remains the same for them as it does for all the others. So the South African economy and the political outlook, very murky.
Why would you favour, it appears that you're going to favour Standard Bank over FirstRand?
No, I actually favour FirstRand over Standard Bank. FirstRand's a bit more expensive on a price-to-book basis, but justifiably so. Their returns on equity are north of 20%, which all the other big four banks can't achieve at this stage. So FirstRand is your premier
South African bank?
Standard Bank, it's just that, you know, it's been where it has been from a PE and from a perception basis for so long that, as Paul says, you know, the cycle has to turn in their favor at some point in time.
Let's have a look at that share price graph again.
It doesn't look as good as FirstRand because it doesn't have the big leg up in the early years, and it's sort of been drifting around at this sort of band between 100 and 150 rands a share for quite a long time.
And to all the politicians, again, please take note of 2016 and Nenegate, the implosion in the banking share prices.
So, hot or not?
Hot or not?
I'm going to go not hot. We must wait.
I'm going to go hot.
You're going to go hot?
Yeah.